is Cassandra Fortier. I'm a mortgage advisor at Meta Mortgage Group. And welcome, Vince. Thank you for joining me this morning. I'm sure you all know Vince. He's our chief in charge over at Meta Mortgage Group, our principal broker. Every once in a while, I like to nail him down for a little bit of time to have a chat about kind of the hot topics that we're seeing in the mortgage world. And this week we had a great discussion with our team. Every Tuesday morning we meet just to kind of get a pulse on what's going on, have some great open discussion. And this week we specifically spoke about various stages of the pre-approval process, which we do talk about a lot because we are very big on that process and how important it is. But what we've come to realize is that there's a big misconception out there about a pre-qualification versus a pre-approval. And they are two very different things, but we see that a lot of our clients use those words interchangeably. And we just wanted to make the very important distinction on what those mean. So we had a great talk this week, and we thought we would bring it out to you guys and share it on our YouTube page. So you have this resource to fall back on and just keep it in your back pocket for your next mortgage pre-approval.
Yeah, and it's super exciting, Cass, because we've got Matt Arruda, also part of the team. He's a mortgage advisor on the team. So he's here with us. Hey, Matt.
Hello, everybody.
Hey, Matt. Thanks for joining us.
Thank
and
you.
We've also got Stephen, who's a mortgage associate. My God, he's a financial advisor, ex-financial advisor, coming from one of the major financial institutions, and he's now a mortgage agent with us. How long has it been now, Stephen?
About 6 months.
Love it. He's doing great. So we're really happy.
I've been calling Stephen our chief economist.
Absolutely.
He's our numbers guy.
We're gonna pin you down for some stats, okay?
Absolutely.
Steven, maybe, you never know. If not now, it's gonna be on the next one, okay?
Sounds good to me.
Calendar. I love these picking your brain sessions. So you always bring a lot to our conversations with spouting off some stats that give a lot of context. So not so much stats with this topic, but we'll definitely nail you down in the future for some more specific economy advice and information that our clients so desperately want to hear about. So
I love that we have such a good, diverse team, right? Of all people, like we can really go to them about various things, and our Tuesday morning meetings are great for that. We have like people from different backgrounds who bring in a different perspective. So it's really good. But we'll talk today about differences between pre-approvals, pre-qualification, what's an approval. Believe it or not, it's not that straightforward. And then a rate hold as well, because people are interchanging these quite often, right, Cass?
That's right. Yeah. And sometimes it can be a little bit scary when I'm speaking to a new client, or even just socially speaking to people, and we get on the topic when people find out you're a mortgage agent. Now they go, oh, what's going on with the market? I'm hearing some crazy things, and they want to pick my brain about stuff. And when I ask people, have you been pre-approved? They say, oh yeah, I was pre-qualified. And the one I love, yeah, I did it online in 10 minutes. Just makes my whole body itch when I hear that. So maybe let's start there. What's a pre-qualification, right?
So pre-qual, as we know in the industry, a pre-qual is very informal, right? So that's sort of your online app that you can use, or oftentimes, to be honest, and Stephen will tell you, as he's fresh out of the banking world, a lot of the bankers will do this, right? We'll pre-qual a client over the phone, right, Stephen?
That's correct. Yeah, with very little information at their fingertips, based primarily just on word of mouth in terms of income that the client is stating. And there's no formal credit check done whatsoever at that particular point in time. And the algorithm spits out a number that the advisor punches into their system, and that's what they give to the client. So it's very informal and not really reflective whatsoever of their potential pre-approved amount on a mortgage.
So are we safe to say that when a pre-qual is done through a bank in general, of course, we always say in general because it depends on who you're working with, but in general, it is extremely an informal and probably an unreliable number?
For sure. 100% I agree with that statement.
Yeah. And so that's one thing that we want to caution our clients when we're getting into this discussion about what a pre-qualification is. A pre-qual at the end of the day is just a rough estimate based on an algorithmic calculator done either in a branch or on an app or online yourself, you know, at 2 o'clock in the morning, as a lot of clients do when they start the process of shopping, and they're maybe afraid to talk to somebody because they're like, I don't even know if I can qualify. I don't even know if this is possible, right? So I think we all agree that it's not a number to rely on, because it's not backed by any sort of advice, and it's not backed by any suitability, and it's not backed by documentation as well, which is most important, right?
I do think the one value of a pre-qualification that I've seen a few times is a lot of people, I know my generation of friends, they're all starting to buy houses. They've bought their first house, maybe buying a second. And with a lot of the information in the media, people have this attitude of, it's never going to happen for me. It's an unattainable goal. So they're very intimidated to reach out to a professional because they don't want to waste any time. So I often send them over the link to My Mortgage Toolbox, which is an app that we have. You can get it. I think it is linked on our Instagram page as well as our website. But if anyone needs it, reach out. We'll send it over. And it's an online app where you can run these numbers. It has a lot of great features, but I'll start by sending that. And then once people see they are qualified for something, I think it gives them a little bit of peace of mind that there is a conversation to be had here. So the pre-qualification definitely has its place. And I think that's one of the big reasons why those apps work so well.
That's a good point. That's a good point. So I think we're clear on what a pre-qual is. I think shall we talk about pre-approval and get Matt's point of view on a pre-approval, because you've been involved since June of 2021.
And I've seen some changes too.
What a time to join.
Boy, Matt, you came in both feet in the fire, man.
Let's go deep end. No, for sure. I mean, it's on the heels of that, it's to know very clearly, very concisely that a pre-qualification is not a pre-approval and vice versa. And the pre-approval is going to be the time in which a lot of the information that we collect ahead of time is when a mortgage professional will then dive deep into it. And it becomes almost the second course of the meal. You had your appetizer with the pre-qualification.
Of course, he would bring it to a meal.
I got it.
Hey, that's why we all get along so well, okay?
Absolutely.
Because every meeting involves food, okay?
Yeah. You know, pre-qualification is fine. It's a nice little appetizer for sure. But now you gotta let the chefs cook now, and you get into it. And now you're gonna get into the second part of this, and you're gonna really start getting into the meat and potatoes of it, right? And really into having your professionals guide you through a lot of the information that maybe you've started to provide in the first part of the pre-qualification, things like your income, and not just necessarily what you gave, but is it the type of income that is relatable to what a lender's going to want to see more accurately to get you to that next step, which is ultimately, of course, fulfilling the purchase or the refinance, getting to that last end. But that's where your mortgage professional really dives in deep into the pre-approval to ask you these questions to ensure that a lot of your own goals and your own targets are going to be achieved over the course of the next however many weeks or months you might be looking at getting down into this process. And ensuring, I'd say just as importantly, and I know that our team specifically does a tremendous job at this, we don't leave the pre-approval meeting without ensuring that our clients absolutely understand the reasons why they are, or maybe more accurately in some cases, are not necessarily at the number that they may have seen and have put their hat up against on the pre-qualification. So maybe it was 500 at that point. Maybe it's less now. Maybe it's more now. But that's all going to be based on the ability of this second step of the pre-approval, where we really sink our heels into this and work together as a team, both with our clients and with one another, with all of my colleagues at Meta. I mean, there's very few files that I touch that other members of my team are not touching, are not seeing, and getting a lot of professional advice along the way and we're finding different angles, like Vince said off the top of the call, where a lot of people bring a lot of different vantage points here and a lot of different expertise is and what their past walk of life are, or what they've seen in their own files, even for that matter. So that's where you've got to lean into it with your mortgage professional and let them take the reins with it while bringing you along to understand why these next moves are being made too.
I just wanted to jump in. I didn't want to interrupt you there, Matt. You were on a roll and you explained it perfectly. So when you
what a great main course.
What a great main
delicious,
course.
Right?
I'm just gonna add a little pepper on the top. So when you mentioned that sometimes the pre-approval amount doesn't match the amount that you pre-qualified yourself for using one of the apps, or so on and so forth. I've had that quite a bit, actually. I find that these pre-qualification tools tend to be a little bit more conservative. I don't want to get too much into the jargon of it, but we deal with ratios, gross debt servicing ratios and total debt servicing ratios. And those apps are set to be a little bit more conservative on those ratios. I had an example this week. I pre-approved some first-time home buyers who were pre-qualified with their existing financial institution and were given an about number, go shopping about this amount, but they didn't get into budget numbers. Like they didn't get into like, what's your comfortable mortgage payment every month. And the number they were given was a lot less than what I was able to pre-qualify them for, or pre-approve them for, sorry. So it's just a good example to take it that one step further, to dig in to see where there's some opportunities in your pre-approval.
Great point. There's so many assumptions that are made on those pre-qual tools that actually may not apply to a client in their situation. So it's really, really important that gets vetted by a professional that will have a look at it. And then obviously, like you mentioned, Matt, take a look at the documentation that backs up the data that you've put in. Garbage in, garbage out. We say it all the time. It's so true. So it's really important that the documentation is going to be vetted, reviewed, and because we don't like roundabout numbers. I think we'll all agree we like absolute numbers, because then you can predict an outcome and give confidence to the client and the client's realtor and real estate agent that's going to be working with you to put an offer in. So really, really important to look at that as well.
Another thing to note with the pre-qualification tools, they're usually set up for a very specific type of lender, like a prime style lender, like those big banks. You see CIBC promoting them, BMO, whatever. That's a very specific mortgage product. When you work with a broker, we work with what, 20, 30 lenders, Vince?
The industry is flooded with different lenders and different categories. We have our prime lenders, we have our alternative lenders or B lenders. And then you have, again, your private lenders, which comprise of literally individuals, and then also mix or mortgage investment corporations. So there's so many different lenders. You're right, Cass. That
app can't capture all those different options.
No, and look, Stephen, who was at a bank, you came in 6 months, you've already looked at some B stuff as well, or some alternative stuff. I bet it was mind blowing when you came to see that what a pre-qual tool is going to do. So that beginner discussion to doing an actual pre-approval, and now what's available to pre-approve now is amazing. Compared to what was available before.
You got it, Vince. The options are endless in this space. And to Cass's point, the pre-qualification tools don't capture our ability to have your file placed with a variety of different lenders, because those lenders have different guidelines in terms of their underwriting requirements and what they will go to in terms of those ratios, debt servicing ratios. So for us, again, that pre-approval meeting is definitely key to kind of vet the options for the client based on the information they're providing. Coded information, documents that will back up their or rather reflect their income. And, we kind of take it from there. And like Matt said, ensure that they understand why they're approved for the amount they're approved for.
Yeah. Should we talk also about, why don't we do this, Cass? Let's talk about the difference between a rate hold and a pre-approval, because there's a lot of people that get that.
There's assumptions. Yeah. A lot of people will ask me once I've pre-approved them. I'm sure Matt and Stephen and Vince, you've seen this before, definitely. People will ask you after you've done that pre-approval meeting. Usually I send an email with, this is the number we talked about. This is roughly what your payment would be, just to kind of recap our conversation. I'll often get back an email that says, how long is my pre-approval good for? Because they think that pre-approval meeting has now held them a rate, which In some cases, yes, but maybe one of you guys want to jump in and just explain a little bit how you can take that pre-approval one step further with a rate hold.
Yeah, no, absolutely. I think, Stephen, let's go back to you and just give us your take on clients who are getting pre-approved, and then of course where the rate hold comes into play and the timelines, because those are very vague. And I think for clients, sometimes it sounds like an absolute, and it's probably, these are assumptions that are done, right? Because Matt, you hit the nail on the head when you said, if we're giving clients and they understand the why at the end of the day, then those assumptions are taken away because they are not there self-regulating. You've done it for them, right? You've explained it in detail. So then they're like, oh, okay, makes sense. Good to go. So Stephen, let's go and maybe give us a little bit of that that understanding. What's the difference of a rate hold and a pre-approval, and how long are those good for? Is there a timeline? How does it work?
Great question. And it's a question that a lot of our clients have. And there is a pretty big difference between what a rate hold and a pre-approval are. So once the pre-approval process has been completed and we discussed various solutions for that client, and based on suitability, whether we're going to be going with a fixed and or variable rate, we have the ability to hold a rate for those clients. Now, with the majority of lenders, you can only hold a fixed rate type of mortgage. There are a couple that you can hold the spread below prime on a variable. But in most cases, with someone who's more suited to a fixed rate, we can hold the rate for up to 120 days. Now, that does not mean your pre-approval is valid for 120 days. That means that that rate will be held in the event that you finalize a purchase or a refinance transaction over that period of time. The pre-approval is only valid for the period of time that the information you provided to your mortgage professional remains valid. So what does that mean? That means there cannot be any changes in your credit information. There cannot be any changes in your employment information that will negatively impact the application. Obviously, if you've had a raise at work or you now receive some child tax benefit, that will increase the amount that we can approve you for in most cases. However, if there is a change, material change in any of the information you provide to us as part of the pre-approval process, it is best for the client to contact us to let us know what that change is and for us to update the pre-approval accordingly. One other thing I will mention just briefly, in this environment, in the rising interest rate environment we've experienced over the last 6 months, the qualifying rate that clients were qualified for 6 months ago, or in the last 6 months, has changed dramatically. So it is very important that you stay in communication with your mortgage professional if you haven't purchased or if you haven't completed your refinance transaction, because the rate at which you qualify for would have gone up and potentially will continue to go up over the next while here, with potential increases in the bank rate coming next month. And that definitely has an impact on the amount you qualify for. And it can be detrimental to your transaction if you aren't updating that.
100%. I can't agree with you more. The having open lines of communication are so important between client and mortgage professional. A number is not just a number, because that the only constant is change, as we know. So it's not only about the client's individual situation, it's also about what market changes have occurred. So it's really, really important that they keep an eye on that. But that's an excellent explanation, Stephen, on that. Thank you so much for that. Matt, what about
one thing that Steve touched on it, and incredibly important to outline. Cass and I spoke about this briefly here, even before we jumped on the call together. Steve mentioned that the process would need to be finalized within that hold period. So that is very important to make crystal clear, that if there is a rate hold that we do move forward with that does take the span of 120 days, that the purchase or whatever that next step is needs to be completed, including closed within that 120-day period. Not, I would put an offer in that was accepted on day 118 and it's scheduled to close in 90 days from now. That would go beyond the 120-day hold ultimately, even though you signed something technically prior to that 120 number. So just worth making very clear that the entirety of that process must be completed within the hold period of the rate itself.
And a good point to make about that is, 6 months ago, a year ago, we were seeing like 30-day closings often. Closings were happening very quick. The market was moving very quickly. We're now getting back to a place where we're seeing 60 and 90-day closings. So that makes that rate hold window pretty tight. Yep. Because if you have to go out and look, put your offer in, get your offer accepted, and be moving forward with a purchase to close in 120 days, some rate holds are only 90 days. You really got to be hitting the pavement to take advantage of that rate hold. So I typically always tell people if you're planning on buying in 6 months or a year because part of your pre-approval plan was that you need to save a little for down payment, or maybe you need to correct something on your credit report before you can make that, is not really a reason to hold a rate until you are out there pounding pavement, putting active offers in. And typically at that point, you've engaged the realtor. We're talking to the realtor as well. So we're all on the same page, making sure that this can go forward.
So yeah, so Cass, you hit the nail on the head. I was just going to draw that line and see if we can talk about that a little bit, because not every pre-approval requires a rate hold. Yeah. And that's one of the very important reasons is it's really important to know that when you're working with a mortgage professional, they understand the timelines, what the goal is, and the plan really overall, which you can't get on a pre-qualification. You need to go through that pre-approval process, which is almost like what we like to say, a firm pre-approval, because it really does paint the picture of the outcome based on core facts that we have collected throughout the process. And then we would then decide whether or not we recommend a rate hold, which would then hold that rate for a certain period, sometimes 60, 90, 120 days. And then at that point in time, you could then continue and execute. Now, what happens, Cass, if a client holds a rate and then decides to change their mind? So for example, they held a rate for a fix, they went to variable, or the rates went down, for example. So what's the benefit of a rate?
I'm actually dealing with this a lot right now because, and we talked so much about this, there's a lot of insecurity about the variable rate product right now. I think I could speak for everyone on this call. We're still pretty big fans of the variable rate, and that's a whole other discussion. But when I'm pre-approving someone, particularly first-time homebuyers, because they tend to be a little bit more cautious, which is completely understandable, I'll often say, like, let me hold a fixed rate for you. That'll give you some time to decide. If when you actively have a purchase, you've thought about it, you're feeling more comfortable with the variable, maybe you've seen the trends with the variable change in your favor and you realize the benefits that could come from that. If you decide not to go with the fixed, it's no problem. We'll just have to apply for a variable rate mortgage product at that time. Stephen did mention it earlier. There are some lenders that you actually hold, when you hold a rate with them, you're holding all of their products at the same time. So in that very obscure incident, you'd be able to take advantage of whatever variable rate that bank had at the time that we put the rate hold in. But typically we'd just be reapplying. And usually that would be because the rate is lower at the time.
Yeah, so it's really important. I mean, there's so much to talk about on this, guys, obviously. Yeah. And you know, I wanted to obviously thank everybody for being here today. This was a great discussion, right, Cass? I think we had
this was awesome. Time. I appreciate so much that you guys are so willing to do this stuff with me. This is the stuff that I really love, because education is so important to me. And I think that's why we're all in the same team. We all feel the same way. So I love that you guys were able to carve out an hour for us to do this. So we'll get this up on YouTube and we can share it with all of our clients, and everyone will be the wiser.
Stephen, thanks so much for joining us. Really appreciate your insight, your background on this, and we'll have you back again. Matt, thanks again for joining. We've had a couple of nice chats on I think that are on YouTube now that Cass has put up, which is great.
You guys are my typical models that I like to use for these. So we thought we'd spice it up with another face on.
Oh yeah, we'll pepper in, and we'll do more. We're going to do more. We've got so many others on the team that bring in and do such a great job. I brag all the time. We have the best team on the market out there, and it's not just from an advisory standpoint that they stand alone. Like they can speak for themselves on that, but I'm talking about just great people that care. So thanks so much, everybody, for being on here, and Cass, thanks so much for organizing. So
thank you so much, guys.
Thanks, guys.
Yeah, Stephen, I know you've got a call to head to, so best of luck on your next pre-approval, and we'll talk soon, guys.
Thank you.
Thank you.